as the averages rebound in response to a possible détente in the Middle East, we're now back to levels last seen in February, before the whole market got derailed by President Trump's tariff agenda. 4 months ago, everybody was really ready to give up on all speculative stocks that have been flying lately. People were eager to throw in the towel on anything connected to artificial intelligence, with the whole AI complex getting crushed until the market-wide bottom in early April. But now all these groups are on fire again. It's like the tariff turmoil and the open conflict with Iran never happened. Throughout this period, including at the top of tonight's show, I always told you that nothing had really changed on the business side, that the AI bull market was just as strong as it was in January, if not stronger. I thought it made no sense to give up on such a powerful story, which meant the AI stocks got cheaper as they went lower. And now we know that was true. So tonight I want to think about what it means to say that we have a long-term bull market in artificial intelligence, one that can get knocked down, but like Chumbawamba gets back up again. That's why we're going off the charts with the help of Joe Fahmy. He's the portfolio manager at Zor Capital, LLC. He's also the founder of JoeFahmy.com education, because he's got a unique take on this situation. When you look back, we've had a bull market in all things AI going back to late 2022 or early 2023. You can argue about the exact start date, but certainly by May of 2023, the AI revolution was upon us, because that's when NVIDIA, the backbone of artificial intelligence, delivered one of the greatest earnings reports I've ever seen. And aside from a detour earlier this year, the stocks never really looked back. We know that in terms of money-making potential, AI is more of an enterprise technology than a consumer technology. But Fahmy points out that ChatGPT was still the fastest application to reach 100 million users in history. ChatGPT got there in 2 months after it launched. TikTok took 13 months, Instagram 26 months, Snapchat 39 months, and Facebook 42 months. I've been telling you that AI represents the next industrial revolution, and Fahmy sees it the same way. Just like railroads, personal computers, cell phones, the internet, AI can help us boost productivity, and higher productivity translates into higher stock prices across a whole host of industries. That's why he thinks it's safe to compare the AI bull market to the great internet boom from 1995 through early 2000. Normally, when someone makes a comparison to the dot-coms, they're implying that the bubble will burst and we'll all end up in tears. And it's true that dot-com collapse was terrible. But man, the late 90s gave us one of the greatest bull markets I've ever seen. People made fortunes, and they kept those fortunes as long as they were disciplined enough to ring the register on some big gains. Fahmy wants to make this comparison more explicit. If the AI bull market is following in the footsteps of the dot-coms, then we've got 2 or 3 more years of incredible gains. Years! Take a look at a chart from Bespoke Investments comparing the action in the Nasdaq composite from the mid to late 90s in blue to the current moment in red. He starts this with the release of Netscape at the end of 1994. This first chart shows you how the Nasdaq roared in the first 3 years following the launch of Netscape, which was a real game changer in terms of internet access. Fahmy says if you look at the AI bull market from the launch of ChatGPT, their trajectories, well, they're kind of ridiculously similar. Now, here's another chart that shows you how things played out for the Nasdaq composite in the 5 years following the launch of Netscape. So if Fahmy's even partially right, we could have a lot more gains in the AI cohort over the next 2 or 3 years. Woo! Of course, that doesn't mean you should go all in AI here. Even though 1995 to 2000 was one of the greatest bull markets in history, there was insane volatility along the way. For instance, in late 1997, we witnessed a horrific correction thanks to the East Asian currency crisis. In the summer of 1998, we took a beating from the Russian debt default and the collapse of a highly levered hedge fund that was called long-term capital management. Take a look at how the S&P 500 traded in 1998. Okay, it's really important because we had a terrible summer, followed by a terrible fall. The market only recovered after the Federal Reserve stepped in with an emergency rate cut in October of that year. 1998 was so bad that I almost put my hedge fund out of business. But then we came roaring back. The S&P erased all of its losses by December, and 1999 was one of the best years on record. So even if Fahmy's right that we're in the middle of a 5-year bull market in AI, one that could last until 2027, we're still going to see plenty of corrections, some shakeouts, some pullbacks along the way. In fact, we just escaped from one, didn't we? Fahmy points out that coming out of the correction in late April of this year, we caught an incredibly bullish technical signal. It's called a Zweig breadth thrust, named after my late hero Marty Zweig. This is when the 10-day moving average of the percentage of advancing stocks goes from below 40% to above 61.5% within the 10 trading days. When that happens, it shows a decisive change in momentum. You know, we've seen only 19 of these moments since World War II, and all 19 have led to above-average returns over the next 12 months. Well, maybe we're going to join them, huh? Fahmy also points out that there's been an insane level of call option buying, specifically call options that expire in June and December of 2027. It's been happening in Amazon and Google, Nvidia, Tesla, Broadcom, ServiceNow. If the bulls are right, then these stocks can take up the entire market. We've seen that before, haven't we? At the same time, he notes that the VanEck Semiconductor ETF, the SMH, has been consolidating for the past year. Now looks poised to break out to the upside. Big consolidation, upside. Given that NVIDIA's been roaring lately, while Taiwan Semi and Broadcom have also started working their way higher, he's feeling very bullish about the chip makers. I also like the action in AMD and Marvell. Of course, this is not just about the bull market in AI. Whether or not the Fed cuts rates at its next meeting, it's very likely that rates will go lower over the next 12 to 24 months, not higher. And lower rates are almost always good for the broader stock market. Look, if the AI boom is really a sequel to the dot-com boom, then that's good for more than just the AI stocks. We had all sorts of big winners in the late 90s because people felt so good about the stock market. So here's the bottom line. The charts, as interpreted by Joe Fahmy, suggest that the AI bull market is following closely in the footsteps of the dot-com boom, which would mean we've likely got 2 or 3 more years of gains, even if we definitely won't get there in a straight line. Keep that in mind the next time something happens that makes you want to give up and sell everything. Let's go to Michael in New York. Michael.
Hello, Jim. How are you? Booyah.
Booyah,
I'm
Michael.
Actually in Arizona, but I'm from the Bronx. I have a question concerning CrowdStrike. I purchased it in 2020. I'm up 649%. It got to 10%. I sold a third. I got my principal back as well as a significant profit. It is back up to 8% of my holdings. Do I hold it or do I take more profit?
Many disciplines involved here. Obviously, you exercised the first discipline. That was terrific. Next discipline, you're a little bit too overweighted in CrowdStrike, but I do like CrowdStrike very much. Why don't you take it down a percent? Just take it down to 7. And then I think you let it go. It's a little bit more like what we do with the Travel Trust. We talk about it again tomorrow at noon. But thank you for sharing that with us. You know, I think CrowdStrike's terrific. The charts, as interpreted by Joe Fahmy, suggest that this AI bull market has a lot of similarities to the dot-com boom, with some outsized gains still to come. So just remember that the next time you want to give up and sell everything. Much more Mad Money, including my sit-down with the CEO of MasterCard. I'll get engaged in what kind of disruptions these stable coins might be posing to the business, fresh off the company's annual shareholder meeting. Then, discipline will always trump conviction in the stock market. I'll tell you why it's more relevant now than ever. And, of course, all your calls rapid fire tonight's edition of the Lightning Round. So stay with Cramer.